Hey folks, welcome back to another splendid, extraordinary, informative session of the Wizard. Don't forget to give me the thumbs up and don't forget to subscribe to my channel if you are new. Let's go to the video. This is the London session. Sorry. In this video, I would love to show you some extraordinary information, what I have already explained in my London session playlist. But this is the live example so that you can be confident to go for this type of setup by doing the backtest. Over here, all I need the 15-minute chart. So if this is my 15-minute chart, and as you can see, the London session start around 1. So this is that 1 candle. This London session is valid until 5. So from 1 to 5, what I will start to look for in that specific time frame, I would love to look for some kind of relatively equal highs or lows. Can market make the relatively equal highs or lows? So when market is going higher, you can see this is the first high, then this is the second high. So first I would love to mark this high as my extreme high. Okay. As you can see, market has made the relatively equal highs. Then what I should look for? Do I have any high time frame PDRA? That means, is there any fair value gap market has traded? Now you can see either way, this is the 50-minute fair value gap. This fair value gap is still valid because nobody closed this fair value gap perfectly. So in this fair value gap, this has been traded that fair value gap. Either way, you don't need that fair value gap because it was inside the new week opening gap and it was rejecting from the constant encroachment of that new week opening gap. So either way, I don't really need the 50-minute fair value gap, but I just showed you there was a 50-minute fair value gap. So after watching the time, so first time from 1 to 6 in this time frame, can market make the liquidity? When you will see that market has made the liquidity, what is the next part? Did it trade in a higher time frame PDRA, either the 50% or the upper quadrant or the high or the low or the lower quadrant of the new week or new day opening gap, or if there is any 15-minute fair value gap? As you can see, it has traded both new week opening gap, constant encroachment and fair value gap. So the second requirement is filled. The third requirement is market in the kill zone? What is the kill zone? From 2 to 5 a.m. That means you are going to push your button if market is inside 2 to 5 p.m. in that time zone. Otherwise, this entry is not valid. So all you remember that this is the relatively equal highs. This thing you have to keep that in your mind. So this line, purple line, is that. Now I'm going back to 1 minute chart. So over here, this is that purple line. Okay. If you take a closer look, this high came to this purple line very near. Then it displaced over there. See this displacement? That was the market structure shift. This is a swing low, which is absolutely perfectly valid for market structure shift. If you go for that market structure shift around that area, so from 1 minute chart, what you are looking for? You are looking for that market has taken some kind of buy side liquidity from 1 minute chart. As you can see, market has taken that buy side liquidity around that area. So this buy side liquidity has taken over there. After taking this buy side liquidity, market has given me the perfect market structure shift with the displacement. Now, if you mark the fair value gap over here, this is the fair value gap. If you mark it that area, okay. So this is the fair value gap. Did market trade that fair value gap with immediate reaction? Absolutely. Where is your sell side liquidity? Now you can see this is all the relatively equal lows over there. So I have marked it as my sell side liquidity, where you are going to push the button. If you see market actually tapped to this fair value gap, immediately you are going to push your button over there. Your stop loss is going to cover that high, okay, just that high. Or if you want to put it little tight stop loss, something like there, it is also valid. But in my opinion, in London session, put the stop loss above the high because the target is not, the stop loss is not too big. Now where is going to be your target? You will go for the extreme liquidity from 1 minute chart. So that should be your target here. That 18 handle is going to be your target. But you have to take a partial when market will provide you 15 handle. So if you take your entry from the low of that specific fair value gap, exactly from there, and you are going to count the 15 handle. So where is 15 handle? There is 15 handle around that area. Okay, just here. This is the 15 handle. You have to take the partial from there and you have to put your stop loss to the break even. Then your target will be your liquidity. If it provide you the liquidity, perfect. If it doesn't provide you the liquidity, you will just get a stop loss to the break even after taking the partial. If you don't have the way to take the partial around that area, to that 15 handle area, okay, in that type of situation you have to close your trade. Now this is a very strict rules for London session. because in London session your target should be maximum 15 to 20 handle. Keep that in your mind. I don't care about the liquidity, I don't care about anything else. So all you have learned that you are really not caring about the liquidity in the London session. Instead, you are going to care about the making liquidity session. So this liquidity is going to be made from your higher time frame, not from your lower time frame. Obviously, from at least from 15 minutes chart, and then you are going to trade like that. So this was the first entry. I'm just going to remove this one. This was the first opportunity to push the button. I was until here. Then I got sleep. Okay, I didn't sleep at night, so I was watching the market, and when market was around that area, I got asleep. Okay, so I actually missed that entry, but don't worry, I'll show you my entry. Then when I get up, I saw this run, that run I have seen, and I was thinking that okay, maybe market is going to take this sell liquidity. I have just missed that opportunity to take the entry. I didn't push my button. I didn't change the price. I just let it go. I thought okay, I just missed the entry. I didn't do anything. When market started to go higher, I have seen this clear liquidity. Can you see this liquidity level? Market has taken that liquidity. I was expecting another lower market structure shift. By the way, look at this candle. This candle is 2 a.m. New York local time. So this entry was inside the kill zone. When market went higher, take this relatively equal highs, I was looking for a market structure shift. Now, do you see any market structure shift? Yeah, there was a nice displacement, but is there any market swing low which is valid for shifting market structure? You can say, brother, this is a low. Brother, comparing with this low, some kind of swing low with this low, is it look like a swing low? I don't think so. So I didn't do anything. I thought that okay, even if this is the market structure shift, parallel cap and market went lower, I don't care. I'll just miss that trade because in my opinion, this is not a clean market. I didn't force the market. I saw that market went higher one more time, make another relatively equal highs around that area. Then finally, it has taken all of these relatively equal highs. Everything has been taken. What else did I notice? See this week, that week 50%. Okay, so around that area. If you count that week 50%, I was looking for that 50%. Can market reach until that 50% or not? If it can reach until that 50% or go through that 50%, I'm just not interested to take sell. I was looking for that with 50%. However, so finally market went higher. Take that buy side liquidity, trade that constant crossment again. What I'm looking for, buy? No. Why? Because market has made the buy side liquidity from 15 minutes chart. 95% of the time, London session makes the liquidity. 5% of the time market takes the liquidity. So if you watch yesterday's session, after 9 consecutive London session, market has taken the liquidity yesterday's session. But today it was clear that market is going to make the liquidity the buy side liquidity. So after market has taken this buy side liquidity, then a very nice displacement. Anybody has any confusion about that displacement? And this swing low, which is valid for shifting market structure. I got my market structure sheet over here. Now you can say that, brother, it was inside this new week opening gap. You told that no entry is valid inside the new week opening gap. Brother, all of those rules are for the New York session. For London session, I made it perfect and so obvious, so clean. And that is, it is going to make the liquidity, and then you are going to get the opposite run. That's all. When I got that market structure shift, I pushed my button over there. I didn't wait to see that market is going to trade this fair value gap. Either way, that was the fair value gap around that area, and there was your breakaway gap. That means market should not close above the constant crossment of that breakaway gap. And as you can see, market never closed above the constant crossment of that breakaway gap. I have uploaded this entry to my Twitter. So if you are with me in my Twitter, you already know that this setup I have uploaded. Okay. So whatever, I wasn't expecting that market is going to trade this fair value gap. Now you can ask me why? Because this entry is inside that entry before taking this liquidity. This was the liquidity. Market didn't take that liquidity. This is the real setup. In this setup, market has made another setup over there. Sometimes market doesn't trade that fair value gap. Instead of trading this fair value gap, market just keep falling and take the sell side liquidity. So sometimes I miss the trade. That's why when I see this inside entry, I push my button when I get the market structure shift. Now let me show you the execution actually over there. So when this candle give me the market structure shift, look over there. I took my entry. Can you see over here? I took my entry. My stop loss over there. I count 15 handle. Okay. So let me show you the 15 handle from, actually it was something like that. Okay. My stop loss was just above this breakaway gap, and my target was 15 handles. So here somewhere. Okay. Now you can see until that area, that was 15 handle. Either way, you just count it, it was just 15 handle. I took a partial to this sell side liquidity because it can reverse from that sell side liquidity. It can reverse after taking the sell side liquidity. It can reverse. As my entry was little lower, as you can see, it was little lower. Then I actually hold it until 15 handle. Then I closed my trade over there. And as you can see, market perfectly went higher again. Now, if you don't want to understand this inside setup, this setup is inside that setup, no worries. You will see this is your first setup after taking the liquidity. Market structure shift, you had the fair value gap over there, the entry fair value gap, you will take your entry over there. Your stop loss is going to cover the breakaway gap, and you are going to hold it until the 15. Okay, here is the 15 handle, so that is going to be your trade. There is nothing wrong. Okay, I just explained that why I didn't want to see that this is going to be traded. Now if you are with me in my Twitter, you have already seen that I write it down. I don't want to see it will be traded. So that was the reason for writing it down over there, because this was the inside setup. Sometimes market doesn't give me the entry opportunity, instead it keep falling. I would love to talk about little more now, just for confirming my thinking. Now when market fall here, what do you see? This low and that low, what are they? Relatively equal lows. What does it mean? That means market has made the sell side liquidity. Okay, is that inside the session 1 a.m. to 5 p.m. 6 a.m. 1 a.m. to 6 a.m. Yes, brother. Okay, after making this liquidity, did it trade any kind of higher time frame PDRA? That means higher time frame fair value gap point of interest. What is my higher time frame? 15 minute chart. Yes, brother, it has traded that 15 minute bullish fair value gap. Perfect. Then go to your 1 minute chart. Are you in kill zone? Inside the kill zone? Yes, brother, I'm inside the kill zone. No worries. Did market take the liquidity? Yes, it has taken the liquidity. Market, you don't need to see here. Okay, it has already taken all of this liquidity. All of this liquidity has been taken. What else you should keep to that week? 50%. Did it went through this week 50%? No, it has respected that 50% of that week. Perfect. Also, you don't need to see this one if you don't want to see, because you know that market is going to make the sell side liquidity. That's all. It can go a little lower of that sell side liquidity from 15 minute chart. It is also accepted. Now, do you have a market structure sheet with displacement? Yes, brother, I have. So where is your market structure sheet? There is your market structure sheet. There, okay. Where is your fair value gap? You can see here is your fair value gap. Okay, there to there. Actually, not like that. Yeah, that was very small. I am not interested. So from here, where you are going to push your button, obviously there. Is that an immediate reaction? Absolutely, brother. Where you are going to put the stop loss, maybe below the breakaway gap. Where is going to be your target? 15 handle. Count it. There you go. You take a partial over there. You take a partial over there. Now hold your trade until this buy side liquidity. Now because this buy side liquidity has given me my expectation, that lower one, it has given me to target it until that buy side liquidity around that area from 15 minutes. That is your extreme buy side liquidity. Put your stop loss to the break even. Is there anything wrong? Absolutely not. When market went lower, make this order block, trade that order block, went higher again, and let me check actually if it can give me that 24 handle or not. Either way, you will observe it in your chart if it can provide you that buy side liquidity. This buy side liquidity is from 15 minute chart. So what you have learned from this specific session, learner session is going to make the liquidity. If it makes the buy side liquidity, you will go for the sell. If it makes the sell side liquidity, you will go for the buy. Can I look for buy and sell? Both of the things. There you go. Boom. Let me write it down. Another precision, brother. That is my boom. So can I take both sell and buy from one learning session? Absolutely you can. If market can make the liquidity, both buy side and sell side liquidity in learning session from 15 minute chart, yeah, you are good to go for both buy and sell. I have already shown that in my live execution, by outlining those trade in my Twitter already. I just made this video for making sure that you got the confidence. The logic is 95% of the time market is going to make the liquidity. By the way, this is my logic. I'm using ICT's fair value gap, liquidity level, or every kind of information. But the concept, market is going to make the liquidity. This specific concept, that is my concept. Thank you guys for watching this video. I hope that you have enjoyed this video. If you have enjoyed this video, don't forget to give me the thumbs up. Don't forget to subscribe to my channel. Don't forget to let me know if you have any doubt to the comment box. So until the next video, cheers.